Good afternoon, everyone. This is Chrissy from Solstice ATR. You can find our website, as you can see it, Solstice ATR. On Twitter, my handle is Chrissy Farah. On Discord is ZOU pound 9345. We use this for illustration use only since the election is behind us. So what I'd like to cover for the coming week, and if you'd like to subscribe, hit the like button on smash button on basically YouTube or on Twitter, and at the same time the weekly video is for free. um, the investors were worried about in the last 8 to 9 months. In the last 2 months, the volatility, we had a W-shaped formation on the Fortune 500 company, the Nasdaq, as well as the Russell and the Dow. Election is right now behind us. We still have the stimulus check that people need to get a vote on from Congress. We got the vaccine to go back online in the global markets. So I will be covering some of the equities. You can go. I just put some examples here. Some of the futures, couple of currencies, and VIX. The only concern I have is this a flag since we had the election. We had a bullish week instead of a bearish week. Do we still continue, or do we get something more strainful in the market? I have a friend of mine on Twitter. His name is Tampa Trader. He always says, we take the escalator up in the stock market, elevator shaft down, but anything is possible. So by me putting this commentary here in front of us, trade the charts in front of you. So what I mean by it, do not be biased to being bullish or bearish. Trade the momentum either up or down. If the market is sideways, stay on the sideline. Maximum flexibility. Flexibility can break, but being fluid with the market, you can maneuver around it in an easier form and don't stay wrong on your trade. So whatever you are trading. So we're going to cover some of Bitcoin, we're going to cover some equities, and we're going to cover some futures. So I will come back to this. You can take a snap of this information at the end of the video. So let's first of all take a look at the S&P, Nasdaq 100, the Russell, and the Dow Jones Industrial Average. On Thinkorswim, you can add a plus sign in between each one of them to give you the full overall market trend. On the weekly chart, we had last week a move down, and we recovered after the election week was being a bullish candle. Do we continue and form a W form to continue higher, to break out of this channel, to continue to the upside in that symmetrical linear regression channel, or a cone to the upside, or do we reverse back down? So let's look at it on the daily. Then I'll go to the 4-hour, a little bit faster time frame. What we're going to see, you can see that W formation. We broke out of that smaller range down here. We have some gaps in here. I'll zoom in to show you how they look like. As you can see, we can draw a channel from here to here. We are right above it. In the last 2 days, we consolidated in the upper range. We do have a minor, little tiny gap between here and here. And we have a breakout coming up on the last 5 days. This was Monday, Tuesday, Wednesday, Thursday, and we had a Friday inside range in the 4 indices up here. So if I take a channel up here, just to show you the breakout, we can connect this high to the nearest one here. And as you can see, we broke out. As long as we are above this channel, and we can continue to the major up channel and continue higher after all the election has been done, which is already done, but the results are not out. We'll see what next week holds for us. So trade the charts in front of you. Don't be biased. You can consider this like a W shape. Does this continue or does it fail? I usually take the Sunday night action from the week before, where we start Sunday till Friday's range, which is the high and low, and I connect the dots from high to low, and this is what we call a Fibonacci. It's that percentage thing right there. It gets you the point A to point be the 5 days range. Usually the 38.2 fib, the 50 and the 61 are very important. As you can see, the machine has taken the last 2 weeks range, connected the high, connected the high and the low, gave us the 38, 50, and 61, and we broke above that one. Do we continue higher or lower? Usually for looking for reversal or changes, usually take the prior month's range from 10-1 till 10:30 and connect those, and you have a major fib in here compared to the weekly fib, which was very bullish last week. So usually you can do a monthly fib, an annual fib, and at the same time we can do a shorter daily fib for the range when we're trading for the long side or the downside. I hope this was helpful, and we'll do that example on another instrument. Let's now go to a 4-hour chart, 15 days, so you can see the formation of those candles. We fell down and we reversed and continued higher. So what I did, I connected this bottom to this high, and that's how we got the fibs for the weekly. As long as we are above the 44 300, 44 360, we stay bullish. If we fall below that, we end up turning to be bearish. Let's take a look at BTC. I'm going to start with this one. This is the first one that's on the radar, and we called it a couple of weeks ago. We'll go to the daily and we'll work our way backwards on the daily. As we can see, we had a linear regression channel. We consolidated in this range, but we're not able to take the 13,000 far away. Eventually, we broke out of this channel right here in the 10,800. We retraced 100% of the prior small annual high. Then we continued higher. The range from here to here is double the range from here to here, and you can see we tested the 38.2 extension. I did not change the fib. I can move it, to the annual high, but I did not. I took the, from the March low to the recent high in August, and I measured that fib. We get an extension minus 23% or plus 23 on top, which would be 123, and plus another 138. That would be the extension to the upside. We still have the 50 and the 61. If this is going to be considered an annual high or come back to retrace a little bit to create another cup and handle, it is possible. I'm not saying this is a short, because everybody thinks everything is, we trade what we listen to. Do your own homework. Trade what you see, not what you think. This was the high for when they launched Bitcoin. We fell down. We came to the 3,000. We rocketed to 13, came back down to 4, and eventually we broke out of that 12,635, and we continued higher. That means, do we get the extension at the 38 as resistance, 50 or 61? Because you can see my weekly fib extensions are updated. Does it create a little shoulder, come back in that linear regression channel to about, the 14,000, 14,500 and continue higher? Possibility. I'm not saying this is a short. This is a very large breakout on Bitcoin. On the weekly chart, you can see that it is in a linear regression channel. If I take this picture out of the way, we just zoom in from here to there, here, you can see that rounded bottom. This is a rounded bottom. It created a smaller cup and eventually broke out of that 14,000 and broke out of the 12.6. So the range is to the upside. The Bollinger Bands are getting extended. The Candler channels are getting extended. The simple moving average, which is my 18 here, and 50 is way away from that high. But on the daily chart, we look for either support or resistance coming back to a level in order to get more opportunity to purchase any instruments out there. So if we look at it, we are quite away from that 13,000, but I have a sharper channel here that I did on the 4-hour. This is going to be a major support I mean, if anybody's long and they holding this position from this breakout, that 10,000 area range where it consolidated and we broke above this channel, and eventually this candle, if you got into this candle here or you got into this range here when it was baselining and broke out, so your stop should be at least in the 15,000 area, 15,150, 300. Try not to be biased to being bearish because the range last week from the low to the high, you have, quite a bit of distance you traveled. The most important thing, you do not lose the 15,050. I'm going to give it room till 15,050. If you do lose that, keep an eye on the 14.4 area to hold as support, or eventually the resistance where it's showing here, the 14.2, for a buyback, because this was the baseline of the other one before the second breakout. We are in a linear regression channel and we are far away from the 20 SMA or my 18 simple moving average on BTC. Let's take a look at GC gold, and I will go over gold similar way. If we can zoom in, we had a baseline for a long time here, and eventually we broke up, we consolidated, fell down, then we came back into a lower channel. I should zoom in a little bit more. Hold on. Let's grab it from here. I do have the weekly fib and the monthly fib on it. You can draw a channel from here all the way down to here, and you can see we eventually broke out to the upside. Oops, this is a fib, my fault. We connect this area here to this one up here, and you can see we had a linear regression channel. We eventually broke out of it. This is the first week continuation higher on the daily chart. This was last month's fib from October till October 31st, the low and high. The extensions was here. Does it continue to get to the 61.8 on the daily chart or not? So if I zoom in here, we broke out of the linear regression channel and the fib to the upside, and this minor small channel from this area to this one, if you connected it, we broke out the last 2-3 days to the upside. The most important thing that we do hold 1,925 as your stop if you are on the upside of the channel. This one is no longer valid. Remove it because we came below it and came back up. This is your breakout continuation, the 50 fib for the week from high to low, which is the Sunday range. Where is it? And it is right here from Sunday. So 11.2 till here, your 38% has to hold, or your 50 or 61. If you fall below this breakout of this channel, watch your fingers on gold. I'm not biased to being bearish, but on the short term, things do change. It created a nice rounded bottom. It had the shoulder here. This is a rounded bottom. It didn't create a shoulder on the right side, but it has the ability to create one to continue higher. That's GC. Let's take a look at oil, CL. I'm working today a little bit differently than what I usually do. And this is the 5-day range for oil from the low to the high. It fell down from the prior monthly high and low in a consolidation. It's in this lower distribution of the 50% fib, the monthly, and just right underneath the 61.8. If it stays below, it's a little bit under pressure. If it breaks back up, we'd like to see it coming back to that $42 range. That's crude. Let's take a look at now RTY, small cap. And we'll move down on RTY a little differently. We have an up channel. We have two sharp channels going up. We have a monthly fib and a weekly fib on it. This was the annual high for the year from January, February. We fell down to March, then we eventually broke up. In June, we had consolidated quite a bit. We tried to break up, and now we're creating a V shape in that area of that upper linear regression channel. You can see those two channels. You have a shoulder, you have the head of it, and it broke out this week. And this is a nice reversal hammer on Wednesday, Thursday, Friday was an inside bar of that big bar from Thursday. Do we hold this breakout channel in order to continue higher or not? This is very important that we watch where we are in the trade. The small cap is usually the leader or the lagger ahead of all the moves. It starts to move first before we can continue. Does it do catch up and get to the annual high on the FIBs? So we are away from the 18 and the 50 SMA. This is the monthly FIB. This is the weekly FIB, which we broke out from last month FIB. Very important that we stay above the 1630. Let's take a look at YM. This is the Dow. And since the Dow, have Boeing, Apple, and other instruments, you have to keep an eye. This was the annual high. We fell down. We rallied up. We consolidated for 2-3 months. We created a W formation. Does it continue to break that linear regression? We broke out of this smaller range here. We do have a channel here. I can draw it, but we need to keep an eye on the 61.8. This is the monthly Fibonacci of the month, and this is the weekly Fib from low to high in order to continue to break up above that linear regression channel. And let's see what happens in the Dow. Let's now take a look at the NQ. The Nasdaq is in a similar situation. Let's zoom down. And you can see this is the annual high in February. We fell down, we continued, and eventually we broke up in June, July. We were not able to come back. We retested the August area. We did a formation of a W, and we are in a linear regression down and up channel at the same time. You can see that the machine has a linear regression channel down. We retested it. Thursday was a nice push up, and Wednesday, but on Friday the Nasdaq was a little bit weak, trying to break up. This was the weekly high on Thursday and Sunday night afternoon high and low. This is the monthly. In order to break out, do we clear the October highs in order to continue in November to an annual high, or do we reset and create a shoulder? So this is the Nasdaq. Let's take a look at the ES. ES is in a similar situation. As you can see, this was the January and February, and then we fell down in March. We rallied up to June, July, then we fell down. Eventually in August, we tried to break up, came back, retested a couple of times, created a W, and these are the fibs that we have. We are in a symmetrical triangle in the S&P 500, which is the SPY, SPX, ES, which is the E-mini contract for the S&P 500. You can see we are in a symmetrical triangle in the upper distribution trying to break out. We had a linear regression channel down channeling in that W formation. We have to stay above the 3420 and 3460 in order to continue higher. If this is retested the 3442, I would be questioning this area if we fall back through the 3420 and come back in, or do we continue and get a new annual high? Since the elections is out of the way, we are waiting for the COVID-19 vaccine and the stimulus package for the checks to boost the economy and keep things going, or does the global markets go back on lockdown and we end up in a bigger recession than where we are today? We have recovered quite a bit, a lot of people back in their jobs, but remember, we're going to trade what we see, not what we think. So let's now take a look at AAPL, and we'll zoom down a little bit. And Apple, you can see it's forming a small W. I don't like this formation. We'll zoom into this area so you guys can see it that way on all of them. So you can see it has an island. It broke out of that channel. Does it continue to come back to the prior 125? And if it falls below the 116.20, 115 area, be careful of it. It can come back down. That's Apple. Let's take a look at Amazon. Amazon is similar. You got two gaps here, tried to break out. And you can see this is the earning report, move down, coming back up. Do we continue and do we clear the 3350, 3,350 or 3345? Or do we fall back down? That's Amazon. Baba. Oops. Baba. Okay. This is something to do with the Asian markets and the global markets. If President Trump does not stay in the White House and Biden gets to be elected to be our president, does this market, like the Asian market, and Baba recovers and continue higher, or do we fall apart? That's one thing you can watch your buy do. Let's take a look at Google. And Google L, as you can see on the earning report, broke up. In the last 5 days, you can see that this is Monday, Tuesday, Wednesday, Thursday, Friday. Friday was a little bit lower than the Thursday's high. Do we hold on to the 1726 area to continue higher, or do we fall? If you can see, it was 1726.10 the high, and the weekly fib was 1726.19. That's coincidence, possibility, but we took the measurement from Sunday to the weekly high on Thursday high. Do we continue or do we fall? Trade the charts in front of you, not what you think. So that's Google. Let's take a look at Netflix. Oops. NFLX. And Netflix, you can see it's got that rounded bottom. This is the report that came out that Netflix will be charging a little bit more on their $8.99 and $14.99, I believe. Then eventually fell down. Then last week it recovered 1, 2, 3, 4, 5. It's an inside candle closed above Thursday's close. Do we continue and break out to continue up to create a W formation, or do we fall back from the prior linear regression channel? I did not fix the channel on it. As you can see, we had a channel from here to here. I did not anchor it back to show you how it looks like. We can do the anchoring on this one for now, so you guys can see what I usually do for fibs and channels. They are very important. They are very helpful. We can get rid of this one. Remove it, no longer valid because it's consolidated in it. And this one we can adjust it to make it a little bit more user-friendly. Remove drawing. You can see this one was the prior high. I mean, you can see it's a little higher, but it's an open corner. We can have a channel coming in this way. This is very important. We've got 1, 2, 3 tops here. If it's going to break through the top, it has to continue. And if it falls through those 3 top bottoms or 4 bottoms, 1, 2, 3, 4 bottoms, then eventually will fall down. So you have to trade inside the range or outside the range. And this is how basically we look for supply and demand zones. Let's take a look at now Tesla. And Tesla, as you can see, this was the annual high. It's been coming down, coming back up, coming down, coming back up, coming down, coming back up in consolidation. And last week, because of China said there was a recall in Tesla vehicles over there, it dragged it back down. Then on Monday, we rallied back up because of the election. It's inside the range of the prior 3-4 weeks range. Does it break out to continue higher, or does it fall? It's a very tight range in Tesla. I don't like the charts on it. It's in consolidation baselining. In order to break out, it needs to come out of compression to either side, and that's what I would like to see. And let's take a look at the dollar sign DXY. That's the dollar. Oops. Dollar sign DXY. Compare it to the European zone, the United States zone, compare it to the Australian zone, compare it to gold, the currencies, the Japanese dollar, the Canadian dollar. It has had a recovery a week ago, and eventually last week fell back down due to the fact that there is a change in the trend we are in. It's still in a down channel. You can connect this point here to the nearest high here, and you can see this is a major down channel slope. In order for the DX to continue, it has to come out and break, or it's going to continue lower. And you can see last time when I called this one, everybody was looking, hey, it's going to create a down move and eventually come back to this low here. It didn't. It U-turned and continued higher. In the last 5 days, you can see this was the Monday, Tuesday, Wednesday, Thursday, Friday. We looked up, then eventually fell back down below the prior 2-week range low. Does it continue to fall? And you got to look at interest rates in the bond market, which is the ZB. And we can look like we did at gold. This is why gold is rallying. Let's take a look at the ZB. This is the 30-year. Or you can look at the TLT. As you can see, this was, it's in a slope. It's continuation. And the ZB bond market interest rates, have been, under pressure due to the Federal Reserve Board keeping interest rates low and inflation and keeping the stimulus money printing machine, which is the plunge protection team, we call them the PPL. And you can see on Wednesday you had a nice spike up. Thursday looked above that linear regression channel and fell down. So this fib from last week is no longer valid. I didn't fix it. And when you can fix it on this one, we're going to remove the drawing. We're going to anchor our fibs for this coming week. So we grab the low here. We'll do this one together. This is the weekly low, and this is the weekly high. I got to get rid of the 2-day range, which I already have here. Remove that drawing. So we have our extensions to the upside, we have our extensions to the downside. So we're going to make sure we do not lose the 172.11 in order for the bond market to continue higher. If interest rates and nobody's buying the bond and it falls through the 61, keep an eye on the dollar if there's a change in the trend. And let's take a look at the slash or the VIX, which is the ETF. Instead of using the VXX, I'm using the VIX to show you that there was last week a push higher, and eventually this week we fell back down in the range. In the VIX, does it continue lower and we lose that $24 range, 23, in order to continue lower, and the market recovers quite a bit? As you can see, this is Friday, Thursday, Wednesday, Tuesday, Monday. We were looking higher last week. The market was unsure, and eventually we fell back down. So keep an eye on what the charts give you, not what you think. And last but not least, slash ES. I'm coming back to it for one reason. I didn't go through Shopify. I don't go through Microsoft, Meli, NVDA, Alexian, Veritex, IBB, Biogen, ABBV. There's a lot of stuff you can cover, but I'm not going to go into it. Once again, this is the weekly daily chart. This was last week's range up, push higher. This was the week before, range push down. This is the monthly high and the monthly low. We have the weekly fib anchored. Keep an eye that we do not lose the 34.80 area or the 50 area or the 20. If it does a head and shoulder and continue higher, that would be great. If it breaks out on Monday and continue, keep an eye on the annual high to see if we break out of that W to get an annual high in December and the holidays. So I hope this was helpful. Check us out once again on Solstice ATR, and you can pause the video so you can take a look at these different instruments. And if you have any questions, you can always tweet to me on Twitter or on Discord, DM me. Hope that was helpful. Over.